trader. What is the mindset of a beginner trader? What are the things that I actually want to switch off the virtual background. Because, yeah, I'm just going to switch off. Oh, the heck do you switch off this thing? None. There we go. Cool. So what is the mindset of a beginner trader? So the first thing that you will battle with as a beginner trader is losing money. How many of you guys on the call tonight are extremely fearful of losing money?
I don't mind losing money if money is still coming in through other sources, but at the moment I don't have any money coming. So that's why I'm nervous about losing money.
Okay, I'm going to explain to you why that is happening just now. Okay, so you don't mind losing money. I want to hear from the other people as well. Guys, this is a reflection time. This is the time that you get to interact, and I'm going to be able to help you guys to overcome this, because I promise you this today. If you do not overcome what I'm about to tell you, I don't care how many strategies I teach you. I don't care how many things I show you. You will never, and I mean this in the nicest way, you will never become a professional or profitable trader. As a matter of fact, you will never be able to become a millionaire through trading, because this is the exact same thing that's holding all of us back. And even myself, I'm battling this thing every single day as well. It's not something that I'm just telling you guys and I'm not battling myself. Okay, so we've got Elaine that raised her hand. So Elaine, are you afraid of losing money? Not afraid of losing money?
Afraid of losing money because I keep losing money and never seem to be going up instead, if you know what I mean. You know, I start with a good,
okay,
a good idea, and like I want to do this and I'm all good, and then it goes against me and I go, oh, bloody hell, here we go again. What the hell? I'm never going to get to the top. That's what's happening. So now I know I've got to fund again, but I'm thinking, what for? You keep losing it. You know what I mean?
No, beautiful. Thank you so much for sharing. Thank you for sharing that with me. I really appreciate that.
I have to also be honest. I do struggle to contain my emotions when I do lose. So that kind of creates the fear. It makes it worse when it does happen. So, and I do find that I'm very wary re-entering. So yeah, it is quite a challenge. I have to say, I'm not sure how to manage that properly.
Okay, awesome. Thank you so much for sharing, Melinda. I think that's very crucial. Do you guys all see that there's a common thread through everything that you said? Whether it is, it's not all exactly the same, because we don't all come from the same background. We don't have the same experiences or the same culture. But one of the things we can agree, it is human nature for us not to want to lose. And that was a system instituted in school. You were praised, you were worshipped, and I'm saying worship because that's exactly what happens. If you had a sibling that was an A student, was the best student, they always listened, that person got all the attention, that person got all the praise, and you that was battling with this, you learned that I am nothing, I am worthless unless I achieve that. So unless I become the winner, I will never be anything else. And then we internalize the reality that we are nothing if we don't win all the time. So if we lose, we beat ourselves up because it is a conditioning that happened to us while we were growing up. Now, I'm sure all of us are, I think, in the same type of demographics when it comes to an age group. But the reality is we grew up in an era where we celebrated you always winning. If you were always winning, then you were successful, then you were the best, everybody loves you, you need to be a winner to be. And unfortunately, trading is the complete opposite. trading is the only industry where losing will help you to automatically win. The more you lose, the more you will win. And let me explain to you guys what I mean with that is. In trading, the trade that you take is never wrong. Because if you take that trade and you put the stop loss 100 pips, you win the trade. If you take that exact same trade, enter at the exact same moment, put in a 60 pip stop loss, you lose. So who was the winner and who was the loser? And that's the problem that you face with trading is that your mindset is towards, if I lose money in trading, then I am a bad trader. You then accept the identity as a bad trader. You accept the fact that I will never be a successful trader because all that I do is lose money. Now that becomes a rooted mindset. Now you believe that you are a loser and that you will never be able to succeed at this. And therefore, that's your reality. Now, I don't know how where you guys stand with your spirituality, but for me, I'm not a Christian as such. I am a child of God, and I believe that God has created the universe for us, and He has put certain rules into place. And if we do not adhere to those specific rules, then we are going against the rules. And when you go against the rules, you will face severe consequences. For example, the law of gravity. We can all agree on this call tonight that if you're going to go against the law of gravity, you're going to meet your Lord and Savior very quickly. That is a fact. I don't care who you are, what your background is. I don't even care how much money you have in the bank account. You're going to suffer the consequences for that. And that is something that cannot be overruled. And the reason why I'm discussing this with you guys tonight, because as a beginner trader, you need to learn that you're going to take losses, you're going to take wins, but the only deciding factor between you becoming successful or not successful is whether you overcome the fear of losing money. Trading is about a give and take. It's a constant give and take. The big question is just, can I keep more than what I give back? And if you can have that flow, for example, like Melinda said, she said, I go in and it goes against me and I get a bad trade. Now I'm too fearful to go in again. That's exactly, your fear is rooted in the fact that you're afraid of losing more money. But what if I blow the account? Do you guys see that you automatically defer to the negative outcome? You're immediately in a mindset of what if it goes wrong, not what will happen if it goes right. And this is the part that you need to overcome with trading. And so this is something that you need to work on for yourself, is to say, when I go into a trade, whether it is a winner or whether it is a loser, I am not going to allow this to determine whether I am a good or a bad trader. Hello, I'm busy. What I am going to do, however, is I am going to apply the strategy. I'm going to, no, I'm busy on my phone. My phone is my camera. Please go. I am going to apply the trading strategy over and over and over, because I now realize that if I apply the strategy over and over and over, I will at some point achieve the success that I'm looking for. And the more you apply, let me ask you guys this. The first time that you got behind, guys, hello. Let me ask you guys this. The first time that you got behind the wheel of a car and you sat in that seat, what was the feeling? What was the fear? The fear was, what happens if I bump someone? Or if I drive over someone? Or what if I have an accident? What if You understand? So you had this intrinsic fear. Now, how many of you guys are driving right now? Do you have to consciously think about driving? Is it like
No.
you get behind the steering wheel? Yeah, Melinda, do you like sit there like, okay, now I need to change the gear shift, or now I need to press the brake. Oh, now you don't do that because you have learned to drive. We're not going
No,
to
I
say
actually
what.
get home sometimes and I don't know how I did it.
Now, that is the autopilot you need to program with trading. But as a beginner, unfortunately, the consequences, it's like a car. If you, let's say you press the brake and you don't put in or let's say you don't disengage the gears and you're pressing the brake, the car will stall in the middle of the road and you will be embarrassed. But with trading, it's a little bit different. If you make a mistake, the trade goes against you and you hit stop loss. You lose. This is the industry where if you make a mistake, you literally lose. But the problem is you then assume the identity, I'm a loser. Huh, Elaine?
Exactly.
Exactly. And here's the thing. I can keep putting money into your trading account week after week after week. As long as you believe you are a loser, money will run away from you. And that is a basic universal law. There is a law of supply and demand. So if you are here tonight and you're thinking, how's your supply and demand looking? You know, if you, yes, gosh. So the reality is there's a law of infinite supply and demand. This law clearly states whatever there is a supply for, there will be a demand. So here's the thing. If you create the supply, the demand will automatically, if you create the demand, the supply will automatically come. So here's the thing. Do you demand of yourself to become a good trader? Do you demand of yourself to go into the market every single day and you say to yourself, I will conquer this. I don't care how long it takes me. I don't care what happens. I will conquer this and I will become a profitable trader, because I can guarantee all of you guys tonight, if I go look at your losses and we delve into your losses, was that a loss because of strategy or because of emotions?
The latter, I think.
Definitely
I'm
the
gonna go
latter,
back.
I know that.
Because let's go back to me on Friday. I'm sure you guys saw my beautiful loss I had. I had a very nice loss.
Thank you for
Yeah.
sharing with us. Makes you feel human.
It does make me feel better.
So yes, I closed 30 on my $100 account. I closed $33. And it took my whole FX Blue statistics into nightmare. My drawdown is now a maximum of 33%. And I sat here on the bed and I was mad as hell with myself because I broke not my strategy, I broke my emotions. Because at that moment, I just wanted to close out the trades, and I wasn't paying attention. I closed out the complete wrong trades. I just shut everything down and I did not realize what happened. Now, the difference is this morning I got back into the market. First trade of the morning, stop loss. Boom. What did I say to myself? I didn't beat myself up. I said, hey, that's part of the strategy. We already knew that I was going to make losses. Next trade came in, took it, boom. I made over $20. So out of the $30 that I had a drawdown on last week Friday, I made $20 back. Why? Because I have the belief inside of myself that every opportunity that comes, I will take it. And whatever goes wrong, I will manage it to the best of my abilities. And this is something that you need to do every single morning. Guys, I cannot reiterate to you how important journaling is. Journaling, guys, I cannot tell you how important it is for you to journal. Write every single day there, say to yourself there, and stop this whole thing of you are not worthy of money. You are worthy of millions. There is an infinite supply of money. The money is yours. The only thing that is holding you back from that money is your mindset. And the moment that you crack that lock, you crack it. And how do you crack? Because this is the question. Everybody will say to you, yeah, the law of attraction, you must think, and as they thinketh, you shall have everything. Unfortunately not. You need to create a vessel, and that vessel is you. And if you create that vessel, and you go into trading every single day, and you build your mindset, and you say, I'm a millionaire trader, I'm a millionaire trader, I'm a millionaire trader. One day you stand up and you got $1 million, you're trading, and you're like, what the hell? How did I get here? Oh, because I forgot that I am actually a millionaire trader. That is how you make your millions in trading. Guys, I'm telling you this, I'm speaking from my own experience. I mean, just for me, on that $100 account, I'm using a full 1 to 3 lot size without emotions, without anything. Why? It is a level of experience. The same thing as getting in the car and driving. I'm getting in the car, I will accept whatever goes negative, and I will accept whatever goes positive, because I know that if I take the journey, I'm going to get to a destination. So now we've spoken a lot about mindset. Any questions on that? Now let's get better at our trading. So let's quickly find out, what strategies are you guys trading? There's some of you guys trading certain strategies. Let's quickly have a look at the Bollinger. Oh, this one's running nicely, but it's hitting a bit of a ceiling here.
I'm confused with what strategy to follow, and so with so many strategies we talk about, and then I just gave up.
So here's the first thing I'm going to say to you, Andrea, is what strategy? There's so many strategies. The reason why we discuss different strategies is because we have different types of traders. We have scalpers, we have swing traders, we have intraday traders. So that's why we have different strategies. The big question for me to you is, which strategy are you more comfortable with? Are you more comfortable with a hedging strategy, or are you more comfortable with an intraday strategy? And second of all, how much time do you have per day to devote to this trading strategy?
Well, if it was making me money, yes, I can spend the whole day. But if not, I have to do something else. So
give me a time frame. Do you have 3-4 hours a day? Do you have 20-30 minutes a day to check the charts, to take some
Yes.
trades?
Yes.
Okay. Then my suggestion to you would be is to take up the Bollinger Band strategy. Apply that strategy diligently every single day until you've mastered it. What does mastering a strategy mean? 6 to 8 months of consistent application.
But that's like not 20 minutes a day.
It is 20 minutes, and I'll show you why it's 20 minutes, because if I go into the chart now, I'm going to show you that technically you're only going to be trading 20 minutes a day. The 20 minutes, you're going to most probably enter a trade in the morning, and you'll only close it later on in the day, or maybe a day later, or it's not going to be a daily trade unless you trade multiple currencies. So here's the thing. The more currency pairs you add into your strategy, the more of your time it's going to suck. And that's why you need to balance everything. Guys, the reason why I don't have a fixed, like, this is how everybody must do it, is because we're not all the same. We don't all have the same time. We don't have the same lifestyles. And you need to build something that works for you. And that's why you need to try something. Try it for 3 to 6 months. If you see, no, this is not working for me, then you start shifting. Not give up on trading, start shifting to a different strategy, or maybe applying the strategy a little bit different. The way I trade, guys, is the way it works for me. So let's have a look at, I just want to go to a random pair. I don't even want to choose a specific pair. So let's go to GBP JPY, right, Andrea? I just want to switch off all the other indicators that I'm running. Wonder you guys are going to be like me. You're running 3-4 strategies on one chart. You're checking them out every now and then, and you're taking trades. That's in the future. Don't try and be me. All right, let's go back. We're on the 1 minute chart. So let's go back 1, 2, 3, 4, 5. So first of all, you need to choose. The first thing that you need to do is you need to choose a time frame at which you are going to trade. So if you're going to say, okay, in the mornings at 7 o'clock or 7:30 or 8 o'clock, I'm going to check my charts, then that is the time that you check your charts. Don't be erratic and wake up at 1 o'clock in the morning and check your charts, and then you're going to mess up. I literally made $120 for the week last week on the $100 account, and I lost $33 because I touched my phone while I was sick. So let's have a look at the bottom. So let's say you are here, Andrea. Okay, I'm not going to do the replay mode now, so we're going to see what's going on ahead, but we can do this strategy like this. So what time, Andrea, do you start? What time do you want to start in the mornings, and what time do you want to end in the afternoons?
Well, it depends on the pair. If I do gold, I think it's on the New York time best. Or no?
Okay.
So that's
All right.
2 o'clock, or it's 1 o'clock. I don't know.
Okay. So gold, I'm going to come back to gold as well. If you are using a lot size of 1 on gold, you need to use a lot size of 2 or 3 on any other currency pair except gold, because of the structure and the contract size of the currency that you're trading. Let me give you an example. This currency pair, you will see the price has got a comma. You are buying 100,000 contract. That's the size of the contract. It's 100,000. If you are buying a gold contract, it's 100 units. So a gold contract is 100 units. A other currency pair, it's 100,000 units that you're buying. So for you to get the results, so if you are taking a single trade on gold and you are making 10 pips, you can make $1 in that 10 pips. If you're doing it on Euro USD, you'll make 10 cents using the same lot size, because the structure of the pair is different, the units. Okay, so you need to understand that first of all. Second of all, you need to also make sure that do not trade. If you are not comfortable with the strategy, don't trade more than 3 currency pairs. Don't. You're going to confuse yourself. Delete the ones on your MetaTrader you are not trading. Delete them for now. You can bring them in later. But for now, only have the 1, 2, or 3 pairs. So my suggestion would be to you, Andrea, is if you're going to be trading different currencies, rather than trading gold, go to Euro USD. Euro USD mimics gold, but at a much lower risk than gold. Any JPY pairs, also great. And also throw in a GBP JPY or a GBP Euro, just to create diversity in your pairs. So let's quickly go back. I'm going to choose one. So how does the Bollinger Band strategy work? So I want to go back to where
So that
we are
will be in the morning. Sorry, that will be in the morning.
Yes, so we're gonna now mimic your day. So this is the day in the life of Andrea trading. Okay.
Okay.
So what? Let's say it is now. It's gonna go to. Remember, I want a 1 minute time frame. So you can also trade in a 5 minutes. Andrea, I would highly suggest you rather go to a 5 minute chart. Start with a 5 minute chart and then work your way down to a 1 minute chart. All right. So you're now on a 5 minute chart. That's 12 o'clock. I want to get to want to get to, okay, here's the 11th, right? So it's now the 11th of April. And you're going to get behind your charts at 7 o'clock in the morning. So you're here at 7 o'clock, right? So you open up your charts and you're observing this. You're observing this. So what is the first rule? So let me put it down. What is the first rule of the Bollinger Band strategy? The first rule of the strategy is we are looking for a break in the band. That is the first rule. We are looking for a break in the band. So what do I mean with that? We are looking for where price aggressively broke the band. And wherever it broke the band, we will then accept that as we are trading a reversal against that band. Because you'll see here, there it broke the band and it reversed very, very nicely into the trade there. Here it broke the band, but now we are here. This happened at 6 o'clock. We're only behind the chart at 7 o'clock. But now what do we see? It broke the band here, right? It broke it there. We are sitting here. So we are looking at this and we're saying, okay, it broke the band there. It hasn't moved to the downside of the Bollinger Band. So I'm going to take a trade. Remember, you cannot see this you're not seeing. So let's mimic.
Yes, but why do I take a trade when the price is lower than what it was when it broke the band? And I'm taking a sell.
Okay, you're absolutely right. Well done on that. So here you are taking a sell, right?
Yeah.
Where is the price right now?
It's down.
It's down. So will I take a trade?
No.
No, I will not take a trade because my entry requirements are not right. This is a dangerous setup. If the price does push back to this level, then I might look towards taking a trade. Let's see what happens. Okay, price is pushing there. Okay, so what happens here? Remember, this is a 5-minute. So let's say you're observing price. You saw price push back up to here, right? You saw it pushing here.
Yeah.
Now let's say you took a trade, Andrea.
Yes.
Because you didn't know what the next candle was going to do.
Yeah.
You're not a fortune teller. You took a trade. So right there, you took a trade.
Yes.
And that was a sell trade, right? So you took a sell
Yes.
trade. Now, first of all, because we're not working with a stop loss or a take profit, it's extremely important that we use low lot sizes. Okay, what is a low lot size on $100 account?
You just said 2 or 3 lot for these pairs.
Yes, I use a 1, 2, and 3 lot size on $100 account. My maximum drawdown that the account can take is up to 50%. That's why I'm using.
So I will take a 1 lot size. Oh. I lost you.
Okay, we had money on the freeze frame.
Yeah.
Can you guys hear me?
Now, yes, you were frozen.
Yeah. All right. So now
So the lot size will be 1 to start with.
on a $1,000 account, by all means, you can use a lot size of 1.
On $100 account.
You can be very careful of, not on gold. So if you're going to be using
No, in these pairs that you said.
yes, you can use a 1 lot size. It will not be an issue.
Okay.
Okay, it will not because of the pips. I mean, look at this. You're on a 5-minute chart, and the pip movement of the pair. This is literally like 10 pips. So no, wouldn't be a problem. And at the same time, you will feel like you're at least making some money. So here you took the trade here. So let's have a look what happens with the trade. So now, Here's the first thing that happens with the Bollinger Band strategies. Once you see, so you took the trade there based upon these entry requirements. Now
Yes.
price is scraping against the band, right?
Yes.
So something is saying to me, I'm getting a lot more upwards movement. So what I do is I then look at it. Okay, so the first one broke it again. Second one broke it. Third one broke it. So I will take another trade right there. Right here.
Then another sell.
Another sell.
Okay.
The reason why I will take another sell is because this sell was now, here was the original sell, right? Remember, this trade was based upon that break of the band. This is a brand new break of the band.
Yeah.
So I will then take another. So these are two isolated sells that I took. Now let's see what happens. Price continues up, not much. Okay, so I want you guys to see this. What is this is a 22 pip drawdown. This is a 22 pip drawdown. That's not hectic. It's not dangerous. That's fine. It's not a problem. The one lot size is based on 100 to 200 pip drawdown. Okay, so okay, now it's pushing the band there. It hasn't broken it, right? Okay, there we go. Look at that, Andrea. Do you see that?
Yes.
Here we have this candle break all the way down there. It's 14:30 in the afternoon. It broke this bottom band, right? Now let's say you were not behind your PC at that time. You were not observing the price. You were away for a cup of coffee. These are 5-minute candles. And you come back and this whole thing happened here. Let's say on this green candle. Let's go back one candle. Can I go from there? So let's say I open up my PC and I see this. This is what I see.
Yes.
Now, the next candle comes into play. See that? That's what I'm seeing. And I'm like, okay. I have a break of structure here. I have one candle. This is the first candle that is pushed back into the Bollinger Band. So if I close this bottom trade, is it in positive or negative?
Positive. I think.
No,
Yeah.
this is a sell. The sell. So if the candle,
Yeah.
if the price is above the sell, I'm in a loss.
Negative.
But it's not above. It's where is the where
price
is the
You've
Yeah,
got one in a
okay.
profit and one in a loss.
Yes.
Exactly. So what do? This one is 6 pips in a profit.
Mhm.
It's 8 pips. The other one is 2 pips. So what am I going to do? I'm going to bag the 4 pips. And I'm going to close both trades. And then
And
the
put
very
a sell and put a buy. And put a buy
Exactly.
trade.
Okay, but now remember, I'm busy doing all of these things. These candles are still progressing. Now, this is check what happens. Immediately, these candles, so I'm busy trying to close out this thing. Next candle comes down, breaks the band again, pushes back up. But remember, we don't take the candle on the break candle, right? We're looking for a candle like these that are retracing in, right? So what do? We take a buy trade, right? Let's say we took it somewhere here. So we take a buy trade. So we've already made 6 pips on the one trade minus the 2 pips on the other trade. We're 4 pips up. So technically it wasn't a profitable trade. It was a break-even trade. That I classify as a break-even trade. But the good thing is I don't have extra trades open on my charts. All I'm doing is I'm applying the strategy. Now let's see. Let's see what happens. Sometimes price does this. It goes directly in my direction. Do you guys see it?
So couldn't have closed this buy trade there, even though it didn't cross the Bollinger Band.
Andrea, this is a lot of people have asked me, can they not close it when it breaks the orange line? I back tested the strategy and the robot that is trading the strategy for me. I back tested on breaking the top band. That's my personal strategy. I find that to be a better way of trading because I get the maximum of the move. Yes, it does mean that I sometimes have a lot of movement. Like now, I mean, guys, we are talking about 7:30 at night. Are you going to be behind your chart? No. No, you've got a life to live. Maybe you're out at a restaurant or you're having a meal or I don't know, doing something. So I'm not behind my chart.
In a Zoom learning from Mani.
Exactly. I love that.
Yeah, but then that trade will stay open overnight. The buy
Exactly.
trade.
That's it. The buy trade will stay up overnight. So what can you do, Andrea, to protect yourself during the night?
It's stop loss.
Well done. Where do you
Or
put
a
the stop
hedge.
loss?
Or a hedge.
You can either hedge, but in this instance, I will say put in a stop loss. So where can you put in a stop loss?
If it
Isn't
goes
that a
under
personal choice though?
the where I took the trade. If it goes under
Exactly. So I can put a stop loss there.
but that's above the where you took the trade.
This is a buy. This is a buy. I can't put it underneath. I need to put it above.
Oh.
You see it? I need to put it above because I can't put a stop loss can go underneath, but if I put it underneath, then I lose money. If I just put it above, I cover. But now I don't want to just put it here.
Ah, wait, I'm with you. Okay.
I
No,
don't want to
I would put it halfway up. That way protects me through the night. At least
And
I'm
I
in
still-
some profit.
So
Even
I
if
will
it-
go 10, I will go 10 or 15 pips up. So let's say 10 pips. Your target is 10 pips. So that's where it is. I will put the stop loss because it's gone in my direction. I will put the stop loss there and I'll go to bed.
And will you still make money?
Okay.
That difference.
Yes.
Yes.
If the price comes back and it engages the stop loss, it will take you out of the trades and you would have backed the 10 pips.
Okay.
A take profit must always be above the price. A stop loss, that's what we call a trailing stop. So let's see what happens during the night. Now we are
Moni, just a question.
Yes.
Your target for the day is 20. If you are 20 pips up already, would you not just close the trade out and say, thank you, had a good day. Tomorrow's another round.
You can do that. Again, this is all towards yourself. You can easily come in and say, no, I'm rather just going to take the trade. I'm going to take the pips off the table, or you can move, for example, like we said, the 10 pips, maybe you say, no, I'm going to put it with my target of the 20 pips right here. And obviously during the night, you would have bagged your 20 pips for the day. Guys, it's entirely up to you. This is the part that you need to develop as a trader. You need to make a decision that's going to be comfortable for you. So it's entirely, you could have taken the pips off the table. So you could say, okay, all the profitable trades that I had open on my currency pairs, I will be bagging all of those pips for the day. And then you can do that. What you can do is you can put a stop loss, 10 pips, 15 pips, and say, okay, if the price does retrace on me during the night, I'm going to take my pips off the table. That's entirely up to you. Those are two options you can use. But please don't make you waking up at 1 o'clock in the morning an option.
But don't I have to put a take profit also?
No, take profits cannot be underneath the price.
Oh,
So
okay.
you must put a take profit above the price. A stop loss, you can trail. We call it trailing with the stop loss. So what you're doing is you're moving your stop loss consistently up with the price so that when the price turns against you and it hits the stop loss, you bag the difference between where you entered and where the stop loss is triggered.
Okay.
A take profit cannot be under the existing price. So if you took so you can't put a take profit anywhere here. You can only put it there.
Okay.
Okay, so you're going to put a stop loss there. And you can put a stop loss above the price. So that I put my stop loss there, then I'm going to bag those pips. Let's see if it hits my... Here's the thing, Elaine. Let's say you did take all the pips for the night. And the price does move further up in your direction. Then you lose that profit.
Agreed. But if you're now going to start becoming greedy, then you're not going to stick to your rules of, I have a strategy of 20 pips a day on one pip trade, one lot size, which gives me my certain figure. Because then you start chasing the trades.
I agree with you fully. You need to decide which one is going to make you sleep better at night.
Okay.
If you're happy to say, hey, I'm going to put that stop loss at 20 pips, maybe it's at 30. If it comes back and it hits my stop loss and I got my 20 pips, I'm happy with that. I hit my target for the day. Cool. It's entirely up to you. Just do not make 1 o'clock or waking up 2 o'clock or 3 o'clock an option, because that's when you mess up your trades and that's where you lose money. So
even if you wake up during the night, you don't look at your phone, because I do not wake up.
No, Andrea, you definitely don't do that.
Okay.
Andrea, please try work on that. Do not open your phone and look at the market.
Okay. But anyway, this one is not going to be working at night. USD
exactly.
Japanese.
Yeah, I want you to get into a strategy that's going to give you a life. That's going to make you money, but give you a life. You can't be up at 1 o'clock every single day. It's not good for you. It's not good for your body. Your health is going to take a knock, and that's not worth it. I will always say to you, if trading is going to make you worse of a person, then don't do it. Trading is supposed to make you better. It's supposed to, yes, it's supposed to be difficult. I'm not saying it's not going to be easy. But I want you to rather have a life. So you guys would agree, this stop loss took me out of this trade. I bagged the 10 pips right there. And let's look what happens in the morning. We're now at 4:30. I got no open trades. Everything is off my charts. Great stuff. So for yesterday, for that day, I bagged 10 pips and I bagged 4 pips. So I bagged 14 pips. How cool is that? I did 14 pips the day before. Now we are at 7 o'clock. Yes, 7:30 coming in. You guys see, we don't really have a move. There's not really any move happening. It's still playing between the bands. There we go. So here we get a very nice move to the upside here. We get this 2 candles coming in here. And you say, okay, cool, bananas. It's time for a trade. I take the trade somewhere here. The reason why I'm placing the trades anyway is because I want you to see that it's not about where you take the trade. The important thing is don't take the trade here. Take it as close to that as you can. Right, let's see what happens. We've got a sell in place. Let's see what happens with the currency. The reason why I'm including USD JPY is because it is a ranging currency. It means it goes up and down, up and down, up and down. It's not a trending market like gold. Okay, there we got it. There we got it. There was a beautiful exit point, isn't it? Do you guys agree with me?
So why not when the green candle, the wick, cross the...
So you see right there? So there you had 18 pips you bagged. Did you almost hit your day's target?
Yep.
Did you really?
Yeah, but then when the wick cross the band, that's not, we not consider that one.
No, that means it's a very hard rejection. The reason why we don't deal with wicks is because the moment that you get a wick like this, Andrea, it means that the price was forced back into the band. Remember, your 2 bands act as support and resistance. They tell you areas of strong demand and resistance. So you're looking for a break. When the price breaks the band, it means there was a lot of volume that came in to push it through the band.
Okay.
So you would not close it here, but you close it here. That is 18 pips, guys. You did 18 pips for the day. But now let's say you are like the rest of them, you're like, I need all my trades. And you took another trade there, a buy trade. And the reason why I'm taking this trade is because I want to show you guys the downside and how you manage the downside. Now, this happens. Who can tell me what this is? These two candles.
Any
NFP. NFP.
But does
And what
NFP affect all pairs?
Yes.
Yes.
All US dollar based pairs.
Okay.
So, no, we are not trading the news. We are not trading it. We are traders. So what happened? NFP came in. This candle happened. You're like, oh my gosh. What the? So let's have a look. What is the drawdown? Guys, the drawdown is 52 pips. 52 pips. Elaine, what is 52 pips? It's
Okay,
nothing.
but 52 pips, if you took a lot size of $1 a
10.
time, that would be a serious
Yeah,
issue.
if you took a dollar a pip on $100 account, you'd be pooping yourself.
Yes.
But if you were taking a one lot size, which is actually a 10 cent on a standard account, which means you had a $5 drawdown on a $100 account, is that dangerous?
Yeah, no, fine. I'll just giggle my way through it.
But is that because of the blue trade we took there?
Yeah, so we took the blue trade.
A buy.
It
Yeah.
went, the buy there, it went 50 pips down. But what do? When the market, so here we have this first candle, boom. And then this candle comes back, it scrapes back in. I get so excited because now I'm going to double up and I take another double up there. So, right? Because that's the rule.
No,
Yeah, that's our rule, isn't it? When it breaks the
Yeah.
band, what do?
We take a buy.
yeah, okay,
Yeah.
fair enough.
And then the price came down. It scraped against the band. Here it broke the band again. I said, okay, well, Marnie said no more than 3, and I'm going to take a third one, and I'll take a third one right there, right?
Oh, now I'm smiling.
That's why I'm teaching you guys this strategy. It is, you guys don't believe, I put the strategy on the internet. You guys have no idea how much hatred I got for this strategy. You are not teaching them liquidity zones and support and resistance zones. And what about fair value gaps? And I'm like, these are beginner traders, guys. How the hell, if I say to you guys, what is Andrea, please show me the fair value gap.
I have no idea.
You'll be like, what the hell is Marnie smoking?
It's good stuff.
And this is why I'm trying to keep it as simplified. So let's see. You took your 3 trades now. Let's see what happens. Let's see.
Oh,
Okay.
two of them are
Price continue.
smiling.
But look at the time. It's 6
9
o'clock at night.
Oh, 6,
Okay.
yeah. Yeah,
Yeah,
7
so
o'clock.
yes, 4:30. Now you're looking at it and you're saying, do I really want to take care of all of these trades tonight? So let's have a look. Now you become a mathematician and you're looking at it and you're saying, okay, I have a 23 pip drawdown here, right? You guys see it, a 23 pip drawdown.
Yeah.
Okay, there's my first drawdown. I have this one, which is in a 8 pip profit. And I have this one, which is in a 26 pip profit. Am I up for the day if I close all of these trades?
Yes.
So what do? I take the 26, I sacrifice the 26, I take the 6, and I go to bed happy chappy. Remember, I just had a trade earlier. Didn't I just make 18 pips?
Yes, so actually, I
That
made
was the
20
previous
pips, that
day.
was the 6.
That was the previous day.
No. That the first day you had the 10 pips you did. This morning we took a trade here. Remember we took a trade somewhere here? Yeah?
Yeah.
We took the trade somewhere here and we made like 18
We took
pips
a
or
trade
something.
at about
didn't it?
10 o'clock. Yeah, there.
Yeah. Okay.
Yeah, somewhere,
That
yeah,
one
so,
was
yeah,
a-
there. There. We took a sell there and we closed it there and that was 18 pips, wasn't it?
Yes.
Yes.
And here we took another what? We took another 7 pips. 6, 7
So we're
pips.
over our 20 and we can smile.
Exactly. And you go to bed and you traded NFP without stress. And then we all go to the night. Now you guys understand why I'm teaching you guys the strategy is because it is easy to follow. It doesn't have a lot of rules, and it's really an amazing strategy for beginners. And the whole idea with this is just take the trades. Don't
But
worry
then-
about the stop losses. Don't worry about the take profits, but manage your trades at the end of the day. Yes, Andrea.
Why did they were against you for teaching us this strategy?
Hey?
Why you said the internet was against you for teaching this strategy?
Because some people in this trading world thinks that one simple indicator like a Bollinger Band, which was invented in 1970 something, is not a profitable strategy because you are not looking at fair value. What did the guy say? There was no fair value gaps and no price action. Guys, let me break it down for you. He's talking about all these fancy names. Okay, I'm going to explain to you what everything, all those fancy words I just told you now. I'm going to show you that Bollinger Bands does all of them. What does it? So he's saying there must be, you must look at liquidity in the market. Do you guys agree with me? When it breaks the band, does that show you liquidity?
I still don't understand liquidity. Yeah.
Liquidity is volume. Volume, and volume is represented by big money coming into the market. Is this not big money coming into the market?
The people are selling at that time.
Exactly.
When it's
So
fun.
that is the reason why the bands are broken is because there's a lot of volume or a lot of people coming into the market selling JPY at that moment. And that's why you have this push. So whenever a currency pair breaks the band, it means that it's an indication of volume. Second of all, the top band acts as resistance. So the red band works as resistance. The bottom band works at support. So those are key levels of support and resistance at that moment in time. So let me show you guys. So if I'm gonna quickly switch off the bands, and I'm gonna show you guys what they want. This is now how traditional traders will teach you. Okay, so we now have a line here. Do you guys agree that there's a level of resistance here?
Yeah.
And now what the are you smoking, Marnie?
Yeah, yes.
No, you know these teachers. And then here was a retracement, and it's making an upwards triangle, isn't it, Elaine?
Yeah.
Yes.
There's our triangle. Do you guys see it?
Yes.
Yes.
Nobody really sees the damn ass triangle, but okay. So here we can see a level of resistance, and this is a level of support. The price is starting to contract here now, and then it broke this band, and we had the sudden move towards the downside, right?
Mm-hmm.
Now, Andrea, do you have the time to draw all these things every day?
The problem
No.
is, Bonnie,
I don't
you
even know
can-
how to do it.
you can draw the lines, but eventually it becomes so cluttered. You need simplicity. Why complicate things? Life is complicated enough. Keep it simple and just make money.
Okay, so let me go show you the bands. Okay, what do we know about the bands
Yeah,
when
see,
they
check there now.
what do we know about the bands when the band starts pulling towards each other? What does that tell us?
Consolidation. Oh no.
Consolidation. Well done, Andrea. It tells us consolidation. So I can just see that with this thing doing the bands pulling towards each other, we have a level of consolidation. Do you guys see the expansion? So right here, here, right there, was the break of price.
Mhm.
The band started opening up, telling us that liquidity is coming in, and it made a downwards movement. So would you guys agree with me that you pretty much just traded liquidity with support and resistance and everything with a Bollinger Band?
Yes.
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 And on top of that, you also have the simple moving average that it broke underneath, which is telling you that when it's under the SME, this simple moving average, that we are now in a downwards trajectory. We are now selling off. And can I tell you guys why they are negative towards it? Because in their minds, they cannot wrap around the fact that one single indicator can do all of this.
Does when we put the Bollinger Band, does it put the single moving average? Or we need to put it ourselves?
No, here it is. This is part of the Bollinger Band. This orange line
Okay.
is called the simple moving average. So it's
Okay.
the smooth moving average. There it is. Where's my smooth moving average? Yeah, simple moving. You can change it to exponential. We just keep it to a simple moving average, a 32 period simple moving average. And we are keeping the Bollinger Bands as tight to the price as we can. And I mean, the reality is, if you just go back in price, you can clearly see that if you were trading liquidity zones and you were doing all these funny crap that people want you to do, Bollinger Bands is an amazing tool to show you liquidity or volume, to show you levels of support and resistance, and to show you retracements. Because one thing you can really bet on is that this is a very strong, let me show you guys this, how amazing these bands are. And I think it's because people can't wrap their mind around something being so simple, and so, because it's so simple, it's so easy. And I don't know, people want to always complicate trading. I don't know why. So let's go back. Do you see here? It slightly touched the band. Let's go back. Look there. Oh, wow. Don't you guys just see how perfect that is?
What we're looking at?
So look at this. Do you guys see right here? I said to you guys, right here, there was a strong, and I just put the line in there, right?
Oh,
I just put it, and then let's go back. Let's see. How strong is this level of support that the Bollinger Band? Check there. Magic, eh?
Yeah.
How did the price exactly stop there and then go back?
Very good.
Because guys, the reality is the market is going to do the exact same thing over and over and over and over. And because it's going to do the same thing over and over and over, we can trade the damn thing.
But just another question. 20 pips on $100 account in one lot, it's just like $2. Is that what it is? More or less. Oh no.
Yes. Yeah, 20 pips at a lot size of 1 on a cent account or a standard account.
Cent.
Cent account, if you're using a full 1 lot size, it is 10 cents per pip. So that is $2, yes.
So to make $30 a day, we need to put much more money, or what?
You can, yeah, I mustn't say this, but you can increase your lot size.
Yeah.
You just need to take into consideration that you can manage your drawdown. Because if you go above a lot size, here's the thing, Andrea, if you can consistently make 20 pips every single day, right? You are consistently making 20 pips. You know exactly what to do when things goes against you. Then you can start moving from a 1 lot size. So let's say you're using a 1 lot size and you're making $2. If you're using a 2 lot size, you are making $4.
Hmm.
If you're using a 3 lot size, you are making $6. And then if you're using a 5 lot size, you are making
$10.
$10. So if you can manage a 1 lot size and not freak out and stay within the trade, and you know, and keep level mind, keep your level head and level mind and say, okay, this is, I'm going to trade my trade. I'm going to be watching my trade. You can automatically progress to stronger lot sizes with a small account. The big thing is just, can you manage the drawdown and can you proactively manage the trade?
And would
here
you,
I
do it, would you do it in the account that I got, or would you I have another account with $100 which I'm not trading, or start on that $100?
go to that $100 account, push the one lot size tomorrow and start practicing.
Okay.
That's the only way you're going to learn, is to go in there, to use a full lot size, trade it. And what, so let me say, what is the worst case? So what is the worst case scenario for you? Is you go into a 200 pip drawdown, right? That means you are in a $20 drawdown, which is 20% of your account. You simply hedge that position, right? You carry on trading the next day, make another $10 and use $4 to start closing out the hedge. That's it.
Okay.
You understand? And trading is all about managing your risk. And if you can proactively manage your risk, you're going to be okay.
Okay.
Now, let's quickly talk about, do you guys want to talk about hedging? Although we are already at 8 o'clock, but it's fine. Let's talk. Do you guys want me to show you how the hedging, how to unhedge your account step by step?
Yes. I'm confused about the robot hedging now.
Okay, I'm going to go into the robots now. Let me open up my robot. So, you are now trading and you have gotten yourself into a hedge. Wait. Let me just open up my robots first. It's asking me here for what? Okay, continue, please. So, oh, this one's drawdown is looking beautiful. But I was stressing my ass off over this robot. I mustn't say stressing, because then you guys can say, Melanie, you say we shouldn't stress. But I was stressing. I'm not going to lie and say I wasn't stressing. All right, so here's my one robot running now. I've slowly engaged my robot back. So as you guys can see, my existing, I have a hedge. So where is my hedge? Let me go to my 4-hour charts. Like, oh, shucks, I just switched my robot out. Sorry. Yeah, okay. I'm sorry. I apologize. I should have opened up a new chart. Let me just open up a new chart, guys. See, even I make mistakes. Why can I not? Wait, let me move all my things around here. Pull this one. Okay, then minimize that one so I don't touch that one again. All right, let me quickly pull on the chart here. All right, so as you guys can see, where's my hedge? My hedge is sitting right here. Do you guys see it? 11.85. So all the trades underneath that hedge means that all the trades that are appearing underneath that hedge belongs to that hedge. All the trades above this means that these are trades above new trades that have come in. Okay. So that means that all of these trades belong to that. And the way that you can see it, Andrea, is right click. You guys are seeing my robot, nee?
Yes.
Oh, good. You can go and right click on the price here and go to comments and click on it. It's going to bring in comments here. So when you go to the top of it, you'll see it says here, rule 2, sell 4, magic number 4, trade 8. Rule 2, sell, magic number 4, trade 9, trade 10. So what am I going to do? I'm going to scroll down to where's my hedge. Here's my hedge. There's my hedge. 11.85 was my hedge. So how do I unhedge my account? Very simple. The first thing that I do is I pull my eye exposure on. Okay, the reason why you'll see that my lots are different is because my robot is still trading. But normally it will say 0.0 here. You'll see that I'm 12.07 lots. I am buy lots versus sell lots. So I have more sell lots than what I have buy lots, right? So what do? In order to unhedge yourself, now this does not just work for the robot. This works for any account. So if you have a private account and it's hedged, you do not go and close that hedge. I want to kick Alan when he says that. You don't go and close that hedge because now you need to manage that position and you stress yourself into another life. Okay? Why am I on the wrong chart now? Let me just close this out. Where do I delete this then? Okay, well, whatever. Okay, so what you can see here is you don't go and close a hedge. Just close it because you think you need to close one section. You need to close it systematically and piece by piece by piece. Because the reason why there's a hedge is because you've got a drawdown and you're going to manage that drawdown proactively. So how do you do it? Very simple. Step number one is I go to my hedge here. I double click on it. And I say, how much of my hedge do I want to close here? 0.01. On the phone, it will show you what the amount is. On your MetaTrader 4, you're not going to see it. And I'm going to say, close 0.01 of my hedge. That's my hedge. Do you see now at the bottom? I have closed one lot size of my hedge. Now I go to the sell trade. Any of my sell trades that are above my hedge. Like here, I have a 0.01 right there. So what do? I double click on it. I make sure that it's 0.0. It must be a sell, not a buy. I already closed a buy of my hedge and I go close. Now you will see I'm back to 0.85 lot sizes and I've now closed our two positions. One position was a buy and one position was a sell. Let me just go to today's custom period, not all history today. So as you can see, I closed out 0.1 here. And where's the other one? I think it would have calculated. Oh, it calculated to the buys for today. So oh, here it is. A sell, no, that's a sell. Yeah, 0.1 sell and a 0.1 buy, which means I keep closing. So whatever I close on my buy, I close on my sell. Whatever I close on my sell, I close on my buy. That is what we call unequally unhedging yourself. Guys, please, unless you have at least 5 years of trading experience under your belt, do not just go and close out that hedge. Don't go and throw that and look at that 11 and just throw out the hedge and say, oh, well, whatever, I can just close the damn thing. Guys, I'm telling you, this is why your account will blow. Because if you're not watching your chart for 1 single second, you will go, if gold does another big move like it did before, it can blow your account and NFP can blow your account.
But I don't understand. The value in dollar will be different from the buy and the sell.
Yeah, but it doesn't matter what the value in the dollar is, Andrea. It's about the lots. You need to close the same amount of lots. If you do not close the same amount of lots, your account becomes unhedged. And if it goes unhedged, you run the risk of more drawdown.
But how do I know that it's that? Because today when I close, I don't know. I closed the biggest buy.
Mm-hmm.
And at 0.2, and it was like $2. And then I closed not a big sell. I closed a small sell, but I didn't know if it was above the hedge or below the hedge. That confused me. How do I know which sell to close?
It doesn't matter. You can start with your I like to close the cells that are at the bottom because I know that when the price turns and it comes back, it's going to take these trades first. So I will always look towards closing the ones at the bottom first.
The ones that are the lower value, is that not the lower value? The gold. If we're talking about gold, the gold was at the lower value. Is that what you mean?
Yes. So it's the first trades that were placed.
But then my drawdown doesn't change. That's confused me also.
It could have potentially changed with a couple of so it would have changed minutely. So it depends. Like sometimes you will, okay, but did you let me show you this on my
Since we
robot.
did
My
it on
robot-
Thursday, Friday didn't change, and today didn't change the drawdown.
Let me show you on my other robot that is the one that is fully hedged, that's not trading at all. So I want to show you there. So here is my robot, it's fully hedged. How do you guys like that drawdown?
Hey,
Mine is bigger. Oh no, mine is a little bit smaller. Six, and now it's gone down. Now it's gone down. Just now it wasn't. Now it's gone to 61.93.
Okay, so do you guys see I've got a huge huge drawdown?
Mani, your camera screen is frozen, eh?
No, I can
Fine.
see. I can see.
Can you see?
Yes.
I can see what you're sharing, but your other camera screen is frozen. Just leave.
Oh, okay. As long as you guys can hear me and you can just see my screen, it's fine. All right.
Yeah.
So if you guys have a look at this chart at my robot, you'll see there's no robot trading, Andrea. You see
Yes.
that?
Yes.
So let's go to trade. Now I'm going to close out some buys and some sells. Here I have a 0.15 sell. Do you see it?
No. Wait.
Yeah, this one, 0.15. Do you see my net lot is 0.00, right?
Yes.
Okay, I'm going to close out this one. There. Now, do you see my net lots has changed?
Yes.
So what does it say? I am which I'm heavy on my need to close my buys. So I go to my buy, double click on it, and I close there a 0.15, right? And I close that portion of the buy. You see I'm 0.0 lots. Do you see this hasn't changed?
No.
Okay. Click on your stripper until the stripper is ready. I just want to minimize this. Do you guys see the amount there? It says 62.57.
So we need to open the stripper and
No, I just click on the smiley face and then I click it again and it will show me the new drawdown.
Oh, okay. That's what I didn't do. But still, like today, the buy that I closed was $2 and the sell was like $20. So
Yes. Look at
I'm losing
mine.
money.
How can you say you'll be losing money?
Well, the sell was in red and the buy was in profit, so I'm losing money.
Of course, closing a hedge means you are going to have you are sacrificing some of your balance to decrease your drawdown. Look at my
No, but
balance.
it's more than the balance because the profit was $2 that I closed and the
No.
loss that I closed was $20.
You are looking at the individual trades. You need to look at your profit and loss here, Andrea. This one.
Okay.
Are you in a global loss? It means that your account, you have made no profit on your account.
Yeah, I have not. I checked today in my phone, the profit loss since December is minus $62.
So you are now in a complete negative. What is the total drawdown in your account?
Now it's 61.93.
Okay, so you're going to have to strip some more in order for you to get your account. So do not, and I'm saying this as I'm saying this because as I'm not saying this as trading advice, I'm saying this as me trying to give you the best support that I can.
Yeah.
Do not engage your robot if you're not 50% and below.
Yeah, you told me that. So I'm not engaging it, but the stripper is not working, so I'm doing it manually.
Okay, keep manually, check your drawdown every single day until you get to that 50% or below that mark. Then only then will we re-engage one of your robots. Because as you can see, look at this. If you look at this robot, my second robot that I'm running, this robot has gone through everything, both those big moves plus the NFP retracement. And look at this robot. I think I found the sweet spot. But in order for me to get you into the sweet spot with a robot, I need you to get your account to a safe drawdown. So let me show you what I mean with that. Do you see here, Andrea? This account has gone through all of those different things. Let me just close this thing. It irritates the shit out of me. How the hell do you close this thing? Yeah, not expert. No, not expert advisor. Remove this indicator. Yeah, delete it. Thank you. So if you look at it, this account, right? I only have one robot trading at the moment on the 30-minute chart. I don't have a second robot. So what I would do is if I get into a hedge in the future, I will not engage both bots. I will engage one singular bot until I have my drawdown in a safe zone. So this bot, I've been running this entire time. Did you guys see my other bot is in a 60% drawdown, right? You saw it.
Yeah.
This is the exact same bot, exact same settings, everything. The only difference is when I got into my hedge, I took off one robot and I'm manually stripping this account every single day, right? Do you guys see? This account is staying at a 40% drawdown.
Okay.
So I have found a sweet spot, but I need you to get to under a 50% drawdown in order for me to help you to do this.
If in the future I decide, can I just close the bot and continue trading manually without losing everything? Oh.
You can do that too. If you're at later stage, Andrea, you got your strategy under the belt. As a matter of fact, you can trade with your bot. So what you can do is you can have your bot at a very low level on the one side, and on the other side, I'm doing it on the other account. This account, the two bots are trading, and I'm trading along with the. Oh, I'm almost a TP on this one. Let's quickly see. So I've got 3 bots trading this account, and at the same time, I'm also trading myself.
My
So I'm
screen's
also
not
taking-
sharing anymore. There you go. Here it comes.
So as you can see, here's the bot trading for me, right? On the 15-minute, this one is trading here. I've got the grid machine on here, and I am taking my own trades in between.
But this doesn't have Alan's bot.
No,
Oh, no.
this is the grid machine. There's the grid machine trading, and here is the history.
Okay.
So you can see that I've doubled the account. Guys, this is the size of the trades I closed today on a 1 lot size. Andrea?
Which one is it?
Yeah, this is the profit I made today.
$11 in one and 21 in the other one.
Yeah.
But now, okay. What about the other strategy, which was the
UT bot strategy, I will not recommend it. I will not recommend it for a beginner. I actually want to withdraw that strategy as a beginner trader strategy. The high Kanashi candles are confusing people, and I will not. For me personally, I'm going to take it out of the book, and I'm going to recant it and say this is not a beginner friendly strategy. This is a strategy for more intraday type of trader. The Bollinger Band one is a really good strategy, and then obviously these robots. The other robot that I did get some more information on is the next one that we're going to be engaging is the Dark Venus, and the other one is the USD JPY. But again, you can't put like 20 bots on. You can put 20 bots on your account. So if you don't want to trade at all, like nothing, you can put like 10, 20 bots on your account and the bots will manage it for you. But I found a really good sweet spot. between me trading the Bollinger Band. Here's the Bollinger Band robot, guys. So the strategy I just taught you, here's the robot. There
But
it
don't
is.
they clash, the two robots? How will
No,
they manage the drawdown?
they, each bot has its own set of magic numbers, Andrea. Here's the bot. Took a trade, closed it there. Took a trade, closed it there. This is the Bollinger Band strategy. Look here, if I go to the, oh, I can't change because then the bot will change. But here it is. This is the Bollinger Band strategy. The one I've been showing you guys all the time. This is the Bollinger Band strategy. You'll see here, it uses Bollinger Bands. Where's it? Yeah, Bollinger Bands. There's the settings we use. 2.8. And I'm using this bot at a 0.5. You can literally take this robot, put it in a one lot size, and leave this thing to trade for you. And it's going to do exactly what I've just been showing you guys the whole time. So you can literally trade the Bollinger Band and put the robot on your account and do both. Here's the bands. There's the one band coming in. There's the top band, and here's the bottom band. It just looks a bit weird on the chart. I can't change my view because then I'm going to mess up my chart. So it's entirely up to you guys. I know you guys want like with Alan, you want a cast in stone thing. The thing is, if I give you a cast in stone type of thing, that's called trading advice. I need to give you guys education, and you need to decide which ones you want to use and which ones you don't want to use. I'm telling you today, Andrea, tomorrow, start with that Bollinger Band one. Take a full lot size. What's the worst case? You can lose $2. What the hell is $2 going to do to you? It's not gonna do anything. Go and practice it.
I leave the other account hedge, where the manual account hedge.
A manual account.
Where I got,
every
because
single day.
I'm going to take a trade on the $100 account and leave the $1,500 hedge, or I don't know, which is gold.
Yeah, it's a difficult one because I can't see the account in front of me. But what I would suggest you do is, why don't you start by mastering a strategy, and once that you've got a strategy under your belt, then you can go back to your $1,000 account and you can slowly start scaling it back. But one of the things I would suggest you do, Andrea, is go back to that account, and the same way that you're closing it on the robot, don't close 0.2 on the $1,000 account. Maybe close like 0.1 every day, but a buy and a sell, buy and sell, buy and sell, and get the drawdown. Because how much drawdown have you got on the account?
The profit margin is 726.
So is that equity?
No, margin level percentage.
Okay, what is the equity in the account?
1521.
15.
1,521.
Okay, how much is the balance of the account?
No, that's the balance. 1521 is the balance. The equity is 175.
Like $175.
Yes.
That's a 90% drawdown.
That's why I hedge it.
No, hold that account. I'm back in the office later this week. Maybe you should come and make a turn with me. Let me just have a look at the account.
Okay.
But tomorrow, close a 0.1 on your buy and a 0.1 on one of your sells. Keep closing every single day. Buy, sell, buy, sell, buy, sell. Let's bring that equity back. Bring the drawdown back until you got in such a place that you can start trading.
Okay.
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 Grab that $100 account tomorrow. Start taking the trades. Start practicing the Bollinger Bands, and then get good at that. Do it for 30 days. And after 30 days, once that other account has got a bit more of its drawdown or more of its money back into your pocket, you can then start trading that other account low and slow out of the crap.
Okay.
Okay.
Marnie, I have a question for you.
Yes.
So let's say we take that put in $100 or put the Bollinger Band robot on. And then if I wanted to trade myself, would I not be taking the trade at the same time if the robot was actually working correctly?
Okay, okay. This is how I trade my Bollinger Band robot, right? I let the Bollinger Band robot take the trades for me. I manage the exit.
Exits, okay. So in other words, you
So-
close that trade.
Exactly. So all the trades with the profit margin and those nice profit margins is where I close the trade, because the Bollinger Band robot, it cannot identify a break in it has a standard deviation that it works against. So if the standard deviation is above 6, it will actually close out the trade. A lot of the time it never gets to that standard deviation 6, which means you can go into a fairly large drawdown of about 30%. So what I've now done with a bot is once the band is broken, so let's say I'm on TradingView and I see the band is broken, I will then go to my robot and I will actually close out the trade. So I'm actually just letting the robot enter the trades for me, because like tonight when I go to bed and I'm sleeping, the bot will open up trades and tomorrow I will manage them.
Okay, I'm with you.
Remember that is a
Yeah, you go ahead. No, go ahead.
Remember that bot is on 15 minutes. You can then, if you are going to be trading that, you can actually take the bot down to a 5-minute and you can activate it on a 5-minute, and then you can let the robot take the trades and then you just manage them during the day.
Okay, with you.
Do you suggest paying for TradingView? Because every time I go to TradingView, my Bollinger Bands disappear.
That's weird. I wonder why. No, don't pay for it. It's only one indicator. If you're like me, where you're trading 6 different strategies, you're back testing, then I would suggest pay for it. Otherwise, no, don't pay for it.
Okay.
But just check your bands, and you can also put your Bollinger Bands on your MetaTrader, eh?
Oh, can we?
Yeah,
On the
it's
phone.
on the phone or on the PC as well. Just go there to indicators and choose Bollinger Band. It's going to ask you the settings. Remember, Bollinger Band is a old indicator. It's a standard indicator that huge hedge funds and stuff are also still using. So they are available on MetaTrader 4 and 5.
So do I need the TradingView at all or no?
No, you don't really need it.
Okay.
I just like the TradingView because I want to look at one specific, like I like working on TradingView because I can scroll through my currency pairs easier. I can track. I am busy testing that other new broker. Oh shucks, I can't remember the name. I am testing that broker. I should have. I don't.
I see
I
markets.
IC Markets, yes. Thank you, Elaine. I'm just testing that broker. I'm only in my first 3 weeks with him. After I've been with him for 90 days, I will only give it to the community. I want to make sure that all deposits and all withdrawals are okay and that we know how everything moves in them before I refer it. So I'm not going to come to you and say, oh, go to IC Markets, and then you're there for 60 days and you can't withdraw your profit. I want to first make sure that it's safe for me and that I'm happy with the processes before I give it to you guys.
But they will have swap fees on.
I'm trading swap fees right now on this account, this $100 account, Andrea.
Okay.
I'm literally, you'll see that I am paying swap fees. I did it deliberately to show you guys that swap fees is not a reason for you. If you're trading in the market every single day, it's not a reason for you not to trade. You don't need a swap free account to be successful.
Okay.
And what was that? Yeah, I think
But money swap fee account is affected if you hedging, isn't it?
yeah, exactly. So that account I'm not hedging on at all. That's why I'm trading with swap fees. The reason why I'm testing IC Markets is because IC Markets plugs directly into TradingView. So if you press on TradingView, take a trade, it automatically executes on IC Markets, the platform. So
Okay.
you can actually trade off your TradingView. That's the only reason why I'm a little bit, why FPS doesn't want to go to TradingView. It's not their goals right now.
Okay, cool. Thank you.
All right, guys, it's like 8:30. Thank you so much for spending all
Okay.
this time.